conflict in Iran. Why isn't gold acting more like your classic safe haven right now?
Everyone, expected gold to rise with the war kicking off, and obviously it's fallen quite a bit, about $1,000 off the all-time high here, and it's really has to do with the oil. You see oil go up above $100 a barrel. That really gets in people's head that now the Fed's thinking about pausing or maybe even raising interest rates to fight future inflation. So it's really an oil story right now. And, until we can get oil prices to come down, those interest rate cuts are going to be off the table, and that dollar is going to continue to rise.
You put it like this on the gold market, Max. You're so tactically nervous, but still structurally long-term bullish. Why still structurally long-term bullish on the metal?
Yeah, this is kind of a short-term move, but all the fundamentals are in place that, caused a 70% rally in gold last year. You still have central banks buying up gold at record pace. You have record debt, record money printing, and there are still many that expect interest rate cuts at the end of this year, with wars taking over in May, or suspected to take over in May. So all the fundamentals are still very much in place for a healthy gold price.
What would you need to see, Mac, to say, okay, maybe that structural long-term thesis is at risk here? What would be on your radar to watch?
Yeah, I think you need to see inflation really rise, 4, 5, 6%. I think you need to see the government get money printing under control, our debt situation under control. And those are some things that I just don't see happening.
In terms of levels you're watching here closely, you say 4,900 to 5,000, that range. Why that range, Max? What about those levels?
You've got a lot of major banks out there that are predicting gold to be at 6,200. You got UBS saying 6,200, JP Morgan, Wells Fargo saying 6,300. So, if we can get above the $5,000 level, I think that will kind of ease some investors' nerves here. Going into the summer.
So Max, let's kind of bottom line this for a viewer. Let's say I'm watching this, I'm a long-term investor. Do you say, hey, right now I would say kind of cautious, or no? Do you argue this is a good moment to step in?
I think this is a great buying opportunity. Obviously, I'm in the gold business. But we've got a lot of clients that have been waiting for a pullback, an opportunity to get into metals. Obviously, we had silver up 140% last year, gold up 70% last year. It needed to kind of cool off a little bit. I think this is a great entry point with fundamentals still very much in place.
What is the price where we are right now, Max? What does that imply about potential gold miners' profitability over the next few quarters?
Every gold miner is a little different. Every company basically has a price that it costs them to get the metal out of the ground. And it varies based on each operation, but that could be anywhere from $1,700 to $3,000 an ounce. But each company has that set price that it costs them to get it out of the ground. And obviously, the higher the gold price, the more profitable they are, the higher margin they have.